Hi everyone, and thank you for joining. I'm Livia Benesty, Head of Business AML at Banking Circle, and today I'll be talking about designing AML for the digital age. Europe's banks are undergoing one of the greatest periods of transformation in their 800-year history. Despite the huge positives these bring, adoption of digital channels by customers and accelerated digitization across financial services have helped create a rapidly widening opportunity for money laundering and fraud. We at Banking Circle carried out a detailed study to help interpret what's happening and how all of us across the industry should respond. This presentation will highlight how AML processes should be improved, their role in the broader context of digital transformation, and why now and in the future, fighting money laundering will mean having the right technologies in place. The European financial services industry is undergoing one of the greatest periods of transformation in history. Banking models that prioritize delivery through branch networks are disappearing and being replaced by digital as mobile takes control of more of our lives. The potential of this new world is well understood. Personalized services for customers, faster response times, instant payments, to name a few. Products now available in real time around the clock. This has also brought a rapidly widening opportunity for fraud and money laundering, and increased opportunities for criminals to exploit gaps between digital solutions, banking systems, and customers. A new report from Featurespace cites the example that proposed increases in the contactless transaction limit to £100 make higher value fraud a greater possibility. Money laundering has grown rapidly as regulation and banks' processes fail to keep pace with the rise in criminal innovation. Banking Circle research investigated how AML processes should be improved to combat digital financial crime, complementing, not conflicting, with financial providers' business lines. Successful AML strategies are more than about complying with regulatory rules, and their implementation should not be limited to the compliance team. Now and in future, fighting money laundering will mean having the right technologies in place, backed by optimal organizational design and robust data and analytics. With the right approach, AML can be an enabler rather than a burden. Advances in artificial intelligence and machine learning can help. Banks, fintechs, PSPs, and other financial services providers should be doubling down on their efforts in this space, investing more in AI. 42% of senior bankers across Europe cited outdated legacy technologies as a major issue. As an example of technological inefficiencies in this space in particular, some current AML systems are still generating 95% false positives. More investment in modern automation and machine learning software is a must. The rapid adoption of faster payments and instant settlement will make more and better AI a necessity. There are now 53 countries working digital faster payment systems, with the number of countries using faster payments expected to grow by around 1/3 in 2021. Such systems make life easier for everyone, from small companies to workers in the gig economy who need to get paid quickly. A wide range of financial institutions have begun introducing AI-based approaches to combat the rise in money laundering. However, the banks interviewed for this study believe that, to date, AI implementation has been far too inconsistent. Part of the problem is that IT budgets are getting tighter across the board for all providers, not just traditional banks. Despite falling budgets, our interviewees believe that AI and machine learning represent the only option for financial service providers to battle money laundering in the digital future. False positives are set to get worse, with the likely number of alerts increasing, without corresponding increases in efficiency. Robotic processes will automatically apply machine learning techniques to data harvested across the entire transaction chain, rather than just select parts of the process as at present. Finding the right way to introduce AI to digitization strategies isn't just about budgets and vision. It's also about the right approach to acquiring, managing, and interpreting data. New AI and machine learning technologies are great, but they need to be fed with clean, well-labeled data from the right sources. From capture to labeling and analytics, data quality must improve radically. Interviewees estimate that up to 15% of real-time transactions are being blocked owing to poor data on either recipients or remitters. Almost 1 in 4 respondents of our European banking survey cited poor quality data as a key concern for the success of their IT strategy, just behind data security at 28%. According to a Banking Circle study, data and AML are top priorities for 2021. Improving data security is a priority for 29% of respondents. 24% of banks said improving data quality is a priority, and 23% are focusing on improving AML processes. By using a wider range of data sources, respondents estimate it would be possible to reduce staff investment on investigating AML cases by up to 15%. Additional data sources could include social media and government ID, but organizations should also look internally across a wider range of customer touchpoints. GDPR is perceived of as potentially hampering the use of customer data. Many European FIs recognize the need to access wider pools of data, but think they're at a disadvantage compared to institutions in the US and many Asian markets, which have less stringent or non-existent GDPR-like regulations. Partnerships can hold the key, as demonstrated by the partnership between 5 Dutch banks to develop an AML solution together. The 5 banks account for 90% of the payments executed in the Netherlands. In partnership with Deloitte, they've created a joint venture which will allow them to pool their transaction data and undertake common analysis of that data. Together, they may be able to identify patterns and exceptions which could indicate the presence of money laundering or terrorist financing. New ways to tackle AML aren't all about technology. Financial providers of all types need to break down silos and challenge any entrenched assumptions and ways of working. Individual fines are reaching record levels, and criminal activity is on the rise. Cross-industry collaboration will be vital, and regulators must be involved in the process. It's time for smarter systems and smarter regulation, and the realization that all parties are united in a common goal. Introducing new approaches to AML in the middle of a wholesale revolution in banking isn't easy. Legacy technology stacks, dwindling IT budgets, and poor data quality make introducing new digital-first approaches a challenge. Respondents to our 2020 survey of senior European bankers cited a lack of consistent approaches between business units in different countries as the second biggest internal challenge they face after legacy IT infrastructures. More than 39% of respondents agreed that such inconsistencies would be a threat to their business objectives this year. Organizations that think holistically about the role of AML and compliance within the broader framework of digital transformation stand the best chance of leveraging operational efficiencies across the enterprise. When connecting compliance and AML to the wider business, there are 6 key elements. Firstly, organization. Organizational design matters. New technology stacks are great, but much of the answer to current frustrations expressed by C-suite executives lies inside their own firms. As well as implementing new technologies, FIs should be breaking down walls inside their organizations and hunting down relevant pools of data across different functions. AML should be elevated within the organization to the direct responsibility of a senior risk manager and pull together experts from compliance, operations, technology, and risk. Technology. Introducing artificial intelligence and machine learning to your AML strategy is non-negotiable. With the advent of faster payments and blockchain-based international currency transfers, monitoring and dispute resolution systems that rely on manual processes will no longer achieve the desired results. Implementation. AI-led solutions must be applied consistently, end-to-end, across the value chain. Data quality and sources need to improve. Unless AI solutions and process automation are employed end-to-end, manual-led processes will continue to introduce errors and inconsistencies. FIs need to improve the quality of data they're using from both internal and external sources and consider widening the range of sources used. Coordination. It's no longer just about institutions. Customers, clients, and partners need to be fully engaged in the battle against money laundering. Regulators are quite rightly placing SMEs and fintechs under the same level of scrutiny as financial institutions, and banks should be working with clients and partners to ensure AML monitoring and reporting are up to scratch. Innovation. New approaches to regulation are needed, more flexible and more collaborative. Rules-based approaches are going to be increasingly difficult to defend given the rate of change we're currently experiencing in the market. The answer is a more flexible approach to regulation, which includes experimentation such as sandboxes and direct collaboration with banks, fintechs, and SMEs. And finally, cooperation. Cross-industry collaboration must get better. What Dutch banks are working on in partnership with the Netherlands AFM and consulting firms shows what can be achieved. Financial services providers of all types must now consider both national and international collaborations, sharing data and approaches to combat increasingly sophisticated international criminal organizations. Banking Circle is an innovative financial infrastructure provider that aims to help financial institutions work together to improve financial inclusion for smaller businesses. A new bank, not held back from innovation by outdated and slow legacy systems, we build solutions from the ground up, based on gaps in the market identified through detailed market research. Banking Circle's decoupled architecture allows it to easily update or replace individual pieces of architecture with limited impact on the rest. We are able to quickly add more functionality and work within new geographies. We are uniquely placed to give banks and payment businesses the ability to provide their customers with faster and cheaper cross-border banking solutions. Providers working with Banking Circle gain the benefits without the need to invest in building their own infrastructure in-house. Thank you again for your time today. Please visit our booth to learn more.